Hey guys, it's Andy from Magoo Investing. Today I'm going to be talking about Pacific Gas and Electric, and we're going to talk about the recent news that's been affecting the stock price and kind of my predictions on where it's going to be going. We're going to hop on the computer and I'm going to talk about my recommendations for a short-term and a potential long-term play with the stock. So just kind of an overview on what PG&E is. Also, the ticker symbol is PCG. Pacific Gas and Electric is kind of the monopoly on electricity and gas in Northern California. So this is the area where I grew up, and it's what I've known my entire life. And now I've moved up to the Northwest, and now we have PG&E, that is Portland Gas and Electric. So it's slightly changed for me, but PG&E runs, turns on the lights, all that kind of stuff. And so from the early 2000s up until early 2017, the stock price had gone from $11 a share all the way up to $72. And since then, it has fallen back just below $11 again. So I'm going to be talking about why that happened and what I see with the stock going forward. So 2017, the stock started to fall because it was found out that PG&E was responsible for the massive fires that hit Santa Rosa, California, which is pretty near where I grew up, killed 46 people, burned down hundreds of thousands of acres, and was a huge problem. And so PG&E was found to be the problem with that, and as a result, the stock price plummeted. And on the day that that news broke, the stock price went from $69 all the way down to $50, and that's just in one single day. So when you have this massive news coming, it hurts the stock pretty bad. And so in February of 2018, the stock price finally started to level out. It started building a support and started increasing in price, and it looked like a good buy again. And then what happens? PG&E is responsible for another massive fire, this one being the largest one in California history. And so after that news broke, the stock price went from around $50 down to under $15. So you have these two massive moves from horrible news that has taken the stock price from almost $70 to now the current day price is $11. And with the current news coming out that as a precaution, PG&E is shutting off the electricity for almost 800,000 people in Northern California alone, it made me come back and take a look at these stock charts. And so my type of trading, I don't love looking at the fundamentals because if you looked at the fundamentals of the stock, it'd be horrible. Obviously, they just filed for bankruptcy back in January, which is why the stock price fell even further. But when you look in the past 180 days, I see some good things come out of it. So now let's hop on the computer and I'm going to talk about what I've actually been seeing. So here we are on the computer looking at PG&E finally. And so this is, I'm starting on the 10-year, one-day chart because I kind of want to go through the progression of where the stock went. And so you can kind of see the price action that it's had in the past and where we are now. So here we are in 2010. Things are hanging around $45 and start climbing. It falls a little bit. Pretty steady, starts climbing, and now we're finally up to the high of 71.57. And so this is in September 9/11 of 2017. And so when we start going forward, this is where the bad news starts to happen. So this is the first news event that PG&E was responsible for the first fire in Sonoma County. Then we start going forward. And then here's the second responsibility for the fire. After it built this nice little support, this would have been a nice little trade you could have taken. But things fall forward, and now right around here, at the beginning of this year, filed for bankruptcy down to $5. And so you might be looking at that and wondering, like, what do you see in that? That looks horrible. Well, I'm going to show you. Now we start going a little bit forward. It started to hang out here for a little bit. All right, so now that we've gotten a current day, you might be wondering what could I possibly see in the stock that would warrant taking a position. And so the first thing that's kind of jumping out to me, if you look down here, is this massive volume bouncing off from $5. And so that volume increases, pushes it up. I don't exactly know if that was a news story or what that was, but the increased volume has kind of been hanging out for a while. And so comparing that to 2016 where things are going great, all the way up to things started falling, the relative volume has increased since then. So increasing volume, always a good thing. So now as we start coming up here, we're going to start drawing some lines. So the first one I see is there was a very nice support getting set up at $38 until the news story broke through it. And so as I've talked about in this channel before, prior supports can become resistance. So this is going to be where our target's going to be for a shorter term play. So we'll chart the bottom, and then as we come in here, looks like it's tried to break into the $24 range a couple times and has had problems. Also, if you look here, this has been a nice little support. When the news story first hit, it came down to here, retested it, news story shoves it back down. So as we come to a shorter term, let's go to a 180 day, you start to see it's been pretty horizontal for the past 180 days. And so this is a great example of a potential double bottom. So in the short term, as I talked about in the past video, or in the double bottom video, the shorter term double bottoms are perfectly fine for if you're going to be holding it for a little bit, which is exactly what I would recommend for this stock, not to hold it too long. So the potential trade that I see here is we're going to chart this, because this has been a recent support. Not really going to worry about this, but this is what we're looking to break. So it's kind of been in this horizontal channel since, let's see, when is this? August. And so the place where I would be taking a position potentially is above these short-term resistance areas. And so I'm going to set an alert for that, and I'm not going to worry about looking at the stock any further until it breaks that. I'm also going to set an alert for if it breaks below this, just to watch it in case it comes down and tries to retest the previous lows. But the play that I'd be looking for here is the break above the short-term resistance, and then the exit would be up here at around $17. And so I think that if it breaks above that, it might just kind of be horizontal for a little bit. But you have some nice margin from $11 up to $17, and the place where you would cut losses is the break below 10. So obviously, if you take a position at 11 and you cut losses below 10, that's a 10% loss. But you have the potential to make 70% if it ends up working out the way I think it might. So just kind of something to think about. And then finally, I'll talk about the long-term plays that I see here. And when I look at it, I don't really see a long-term play here. Obviously, there have been some horrible news stories in the past that have pushed the stock down 50% within a day. I don't want to be anywhere near that stock if it happens. And there's potential it happens again. So I would not be taking a long-term position on this stock. The short-term play that I mentioned looks decent. Obviously, there's a lot of risk involved in it when a stock can fall that fast, and it could happen again. But if I was going to be taking a play, I'd be looking at the break above the $12 resistance, and I would cut losses if it falls below this channel. All right, so in summary, this is one of these stocks where if I was going to be taking a position, I'd be looking to hold for maybe a month or less. The longer you hold the stock, the more likely that some massive news event like it has happened the past, or 3 times in the past 3 years, could lose 50% of its price within a day. And so you got to be really careful about that kind of stuff. So I see a great short-term play, but I would stay away from holding it long-term. The only positive thing about a long-term play is that it is very unlikely that it will actually go out of business. Pretty much PG&E has a monopoly on gas and electricity in Northern California, and there's no way that the state would allow something that large that controls so much infrastructure in the state to just go completely under. So it's safe in that aspect, but one bad news story, like we've had in the past, could have a really catastrophic result on the share price and hurt you. So let me know what you guys think about this. PG&E is pretty risky, but I think it has a lot of upside. I think there's some really good short-term plays to be made there, and I probably won't be taking a position because I have better places to put my money, but I think this is one of those stocks where it looks really good on paper, but I'm learning that you actually have to look at the fundamentals sometime, which kind of sucks because I just like looking at the charts. The numbers are more fun than reading words, but with this, it hits close to home, and I did some research, and I thought I'd talk about it because it's pretty crazy that a super reliable stock that went from $11 to $70 within 3 years is now down to $11 again. So I thought it'd be a fun topic to talk about, so let me know what you guys think. Leave it in the comment section down below. Thanks for watching. I'll see you guys in the next video.